Welcome to Financial Budgeting course. In this course, we will understand the first learning about the financial budgeting, what is actual financial budgeting means. Then we will understand its functions, like what all functions are there or involved in financial budgeting or the functions which are available in the financial budgeting. Next concept we will understand is about the types of financial budgeting, that there are various types of financial budgeting, that is of capital budgeting, cash budget, flexible budget and operating budget. And thereafter we will understand various bifurcation of capital budgeting, like their tools, techniques and in fact of the operating budget, and we will understand the deeply understanding of all the types of the financial budgeting. So this is all we are going to cover in the financial budgeting. So let's start with the introduction. In this part we are going to cover the introduction of the financial budgeting. The first is, what is budget? Now, an estimation of the revenue and expense over a specified future period of time. A budget can be made for a person, family, group of people, business, government, country, multinational organization, or just about anything else that makes and spends money. So what does budget means? It means that it is an estimation of revenues, that is the income which a person or a company or any of the, that is the government authority which they has, and the expense which they made over a specified future period of time. So this is what the budget means. A budget is a microeconomic concept that shows the trade-off made when one good is exchanged for another. The next is, what does the budget means? Like, if in case a surplus budget means profits are anticipated, while that is the profits are anticipated means the incomes are more than the expense, that is a company or a person or any of the authority has the income more than the expense, so that budget is known as to be a surplus budget, which is a good sign for any person or any company that the company is growing and is prospecting. Next is, a balanced budget means that the revenues are expected to equal expenses, that is the revenues are as equal to the expense, means the company, for an example, if we take a company is earning that much revenue only, that much expense they can incur. So for that purpose, the balanced budget indicates that their revenues and their expense are equal. Next is the deficit budget, which means expenses will exceed revenues, that is the expense will be more than the revenue, that is the income. This shows a negative sign to any of the company or to any of the organization, that if their expense is more than their revenue, this means that the company is generating net loss, not a profit. Budgets are usually compiled and re-evaluated on a periodic basis. Adjustments are made to budgets based on the goals of the budgeting organization. In some cases, budget makers are happy to operate at a deficit, while in other cases, operating at a deficit is seen as financially irresponsible. Like we have understood, like expense is seen to be a negative sign for any company if the company's budget is in deficit. Now, what is budgeting? We have understood, like it's making sure that you are spending less than you are bringing in and planning for both the short term and long term decision. A budgeting helps you to make your long term and short term decision plans. In case if a company is having a surplus funds, they can make the investment decision plans both for the short term and a long term plan. Unfortunately, many people think of budgeting as a depriving themselves and they avoid it like they do a diet. However, just like a diet is really just a program for eating, budgeting is just a program for spending. If you are hitting a mental roadblock when you hear the word budget, just call it by a different name such as personal financial planning. The budgeting can also be referred to as personal financial planning. That's what budgeting is after all. It's a proactive approach rather than a reactive approach to managing your money. Budgeting is an important component of financial success. It's not difficult to implement and it's not just for people with limited funds. Budgeting makes it easier for people with incomes and expenses of all sizes to make conscious decisions about how they would prefer to allocate their money. It can also help people save for retirement, emergencies, a new car, or just about anything. If a person is planning to purchase a new house, vehicle, anything, the budgeting helps them to make planning for the investment. For many people, having a solid budget in place, knowing how much money they have and knowing exactly where that money is going, makes it easier for them to sleep at night. So that is what we say, that the budgeting is a very essential thing in each person's life, in the organization, in any of the above mentioned, that is for the multinational organizations, or for the business, or for the government country, anything. The budget is very essential. It plays a very essential role in any of the above things, as it indicates that the how much income or the expense the particular organization or a person is incurring. So this is what the budgeting is all about.